Hey there, welcome to Traders Mastering. Today, I'm going to share an amazing trading strategy inspired by Larry Williams. It's like a treasure map for spotting big moves in the market. Imagine this, you're about to trade, and you know exactly when to buy or sell because you've got a strategy that works. Sounds cool, right? If you stick around to the end, I'll give you a powerful secret to make the strategy even more profitable. Don't forget to like, share, and subscribe to Traders Mastering. Let's dive in and master the markets together. Sometimes trading feels like a puzzle, doesn't it? You're not sure when to enter or exit, and it can get frustrating. What if there was a simple way to know when the market is likely to go up or down? That's where Larry Williams' strategy comes in. It helps you solve the puzzle and trade with confidence. By the end of this video, you'll have all the steps you need to make smarter trading decisions. And don't forget, if you stick around, powerful secret to make the strategy even better. Now that you know why Larry Williams' strategy is so powerful, let's dive into the step-by-step process. This strategy is like following a treasure map. It guides you to the right place at the right time. We'll break it down into 4 simple steps. First, we'll identify the trend, then find the perfect entry point, manage our risk, and finally, let the trade play out. Whether the market is bullish or bearish, these steps will help you trade with confidence. Let's start with how to trade when the market is going up or bullish. Here is our bullish strategy explanation. Step 1. Spot the trend on the 1-hour chart. Start by identifying a clear uptrend on the 1-hour chart. Look for higher highs and higher lows. This tells you buyers are in control. Trading with the trend improves your chances of success because you're moving in the same direction as the market's momentum. Step 2. Zoom into the 5-minute chart. Switch to the 5-minute chart to find your entry point. Watch for a breakout above a recent high, as this signals strong buying pressure. Confirm the breakout with a big, clear candle to ensure the trend will continue. This step ensures a well-timed entry into the trade. Step 3. Manage risk with a stop loss and target. Place your stop loss 10 pips below the recent low to protect your account if the trade goes wrong. Set your profit target 3 times the risk. For example, if risking 10 pips, aim for 30 pips profit. This ensures a favorable risk-to-reward ratio, which is key to long-term success. Step 4. Let the trade run. Once you've entered the trade and set your stop loss and target, be patient. Avoid the urge to interfere and let the trade play out. A well-planned trade will often hit its target if the setup is correct. Patience and discipline are crucial for consistent trading results. Let's start with a bullish trade on GBP/USD. This happened on Monday, the 27th, at 3 a.m. New York time. Here's how it worked step by step using Larry Williams' intraday short-term swings. Step 1. Spot the trend on the 1-hour chart. I opened the 1-hour chart and immediately noticed that prices were making higher highs and higher lows. This pattern tells us the market is in an uptrend, which means buyers are in control. Why is this important? Because trading with the trend increases your chances of success. Think of it like swimming with the current instead of against it. Once I saw this clear uptrend, I knew it was time to look for a buying opportunity. Step 2. Zoom into the 5-minute chart. Next, I switched to the 5-minute chart. This smaller time frame helps you find the exact moment to enter the trade. On the chart, I saw a breakout above a recent high. Breakout happens when the price pushes through a level it couldn't cross before, and it often means the trend will keep going. To be extra sure, I checked that the breakout candle was big and clear, showing strong buying power. This was my signal to get ready to enter the trade. Step 3. Manage risk with a stop loss and target. Risk management is like wearing a seatbelt. It protects you if things don't go as planned. For this trade, I placed my stop loss 10 pips below the recent low. Why? Because if the price dropped that far, it would mean the trend wasn't working out. Then, I set my profit target 30 pips above my entry. This gave me a 1 to 3 risk-to-reward ratio, meaning I was risking $10 to make $30. This way, even if I lose some trades, one win can cover multiple losses. Step 4. Let the trade run. After setting everything up, I let the trade do its thing. This is where patience comes in. Over the next few hours, the price kept climbing steadily, just as the strategy predicted. It finally hit my profit target, and I closed the trade with 30 pips of profit. Seeing the strategy work step by step was so rewarding. It's a reminder that when you follow a clear plan, trading can feel less stressful and more exciting. Here is our bearish strategy explanation. Step 1. Spot the trend on the 1-hour chart. Check the 1-hour chart for a clear downtrend. Look for lower highs and lower lows, which indicate sellers are in control. Following the trend is like riding a bike downhill. It's easier and increases your chances of success. A clear downtrend is your signal to prepare for a sell. Step 2. Zoom into the 5-minute chart. On the 5-minute chart, look for a breakout below a key support level. A breakout happens when the price moves past a level it previously couldn't cross. For the price to form a lower high after the breakout, confirming seller's dominance before entering the trade. Step 3. Manage risk with a stop loss and target. Place your stop loss 15 pips above the recent high to protect against unexpected moves. Set your profit target 3 times the risk. For example, if risking 15 pips, aim for 45 pips profit. This ensures you maximize gains while keeping losses small, an essential part of smart trading. Step 4. Watch the trade work. Once your trade is set up, trust the process. Allow the market to move and hit your target. Resist the temptation to close the trade early. Remember, sticking to your plan is what separates successful traders from the rest. Let the market reward your patience and strategy. Here's how it played out using Larry Williams' intraday short-term swings. Step 1. Spot the trend on the 1-hour chart. On the 1-hour chart, I noticed prices were making lower highs and lower lows. This pattern tells us the market is in a downtrend, which means sellers are in control. Why is this important? Because trading with the trend gives you a higher chance of success. Think of it like riding a bike downhill. It's much easier than going uphill. Once I saw this clear downtrend, I knew it was time to look for a selling opportunity. Step 2. Zoom into the 5-minute chart. Next, I switched to the 5-minute chart to find the perfect entry point. On this smaller time frame, I saw the price break below a key support level. A support level is like a floor where the price has bounced up before. When the price breaks below it, it often means the sellers are taking over. To confirm, I waited for the price to form a new lower high, and it did. This was my signal to enter the trade. Step 3. Manage risk with a stop loss and risk management is just as important in bearish trades. I placed my stop loss 15 pips above the recent high. Why? Because if the price went that high, it would mean the trade wasn't working out. Then, I set my profit target 45 pips below my entry. This gave me a 1 to 3 risk-to-reward ratio, meaning I was risking $15 to make $45. This way, I knew I was trading smart and protecting my account. Step 4. Watch the trade work. Once the trade was set up, all I had to do was wait. During the New York session, the market often moves quickly, and this trade was no different. The price dropped steadily, hitting my profit target within a few hours. I made 45 pips on this trade, and it felt great to see the strategy work so well. Following the steps gave me confidence, and the results showed why sticking to a plan is so important. By following these steps, you can trade with more confidence and spot great opportunities in the market. Remember, this strategy combines higher and lower time frames with risk management and the best trading hours. It's simple, powerful, and effective. Now you're ready to try Larry Williams' intraday strategy yourself. But wait, there's more. The powerful secret to making the strategy even better is to use it alongside the previous day's New York session order block and the ICT London session. These levels act like hidden clues, giving you even more confidence in your trades. And here's a special surprise. Larry has a secret technique that I'll reveal once this video gets 1,000 likes. So, make sure to like, share, and subscribe to Traders Mastering. Together, we'll master the markets and take your trading to the next level. Thanks for watching, and as always, God bless you and happy trading.